This week's review of the market reveals key takeaways suggesting a potential market slowdown or temporary pause in the positive developments observed over the past 5 months. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, June 30th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy or sell homes, we explain what those trends mean for you as a homeowner or someone who is looking for a house that you will love to call home. The current inventory is 23 homes, up from 19 last week. The average asking price of those homes was $2,267,000, which is down from last week's average of $2,371,000. Only one home asking $1,425,000 went pending this week. That is less pending homes than last week's number of 12, with a lower average asking price from last week's $2,225,000. And a total of 2 homes sold this week with an average sales price of $1,625,000. That average price was down from last week's average of $1,944,000, and the total number of sold homes was lower than last week's 8. So now that we've analyzed the market's performance over the past week, let's look into the broader trends that provide insight into its overall health and the potential future direction of the market. Before we proceed, if you find this information helpful, we encourage you to subscribe so that you don't miss out on future updates. And why not share it with a friend too? Everyone deserves to be in the know about their local real estate market. All right, let's take a closer look at the market indicators. In the past 7 months, the inventory of available homes in the market has been fluctuating between 18 to 25, which is only about half of the normal amount. This shortage of available homes is causing the market to tighten. Although there has been a slight increase of 4 more homes on the market this week, it is too early to consider this a definite trend. However, when looking at other market indicators, we might be witnessing a typical summer slowdown, likely influenced by people going on vacations and traveling. Nevertheless, we'll closely monitor the situation to determine if the slowdown becomes a more concerning and lasting trend in the housing market. While the increase in inventory and a slight drop in the turnover rate may not be a major concern individually, it's essential to consider them in the broader context of all the market indicators. Currently, we are still experiencing a seller's market with a significantly faster turnover rate than usual. However, when multiple metrics start showing slower and softer trends, it becomes a warning sign that we should pay closer attention to. To anticipate a market in transition, it's crucial to analyze all the indicators comprehensively and not 1 or 2 metrics to drive the narrative. By keeping a keen eye on the overall market performances, we can better understand potential shifts and make informed decisions accordingly. The over-under indicator may have shown a slowdown, but it hasn't been a significant or dramatic decrease. What's encouraging is the average home is closing for over 4% above the asking price, which still indicates a strong market. This demonstrates that there are still robust demand and competitive bidding among buyers. Even if the overall market cools off slightly, there is still a considerable amount of momentum driving it. Based on this indicator, we anticipate the market to maintain its strength throughout much of the summer. This positive momentum suggests that sellers can still expect favorable outcomes in terms of pricing and market conditions. For this 4th metric, it's notable that the average selling price has dropped by approximately 2%, equivalent to around $46,000. However, it's important to consider the context of this metric. When we examine the pending sales, which will be closing in the next 30 days, we observe an appreciating market and increasing property values. It's crucial to keep in mind that closing homes reflect transactions that occurred more than 30 days ago and may not reflect the current state of the market accurately. As mentioned earlier, the fact that only 1 home went pending last week suggests a temporary slowing of the market. It will be essential to monitor this trend closely to determine whether it's a short-term fluctuation or a more significant market shift. This week, the stock valuations in the Silicon Valley industry remained relatively unchanged. While this may not be particularly exciting news, it is still positive in the sense that there are no negative developments or declines. It's worth noting that the tech industry plays a significant role in driving the San Ramon real estate market. When the tech industry remains stable, it often has a positive impact on the housing market, leading to potential improvements. While this week didn't bring any noticeable changes, the stability in the industry can be seen as a hopeful sign for the real estate market in the area. The 4 basis points increase in the interest rates this week is indeed a very slight uptick. While it may not be considered bad news on its own, it's crucial to view it in conjunction with other market indicators. As we mentioned, most of the indicators have aligned this week, pointing towards a potential slowdown in the market. When multiple indicators coincide in this way, it signals that we should closely monitor the market's performance. The slight increase in interest rates, along with other indicators trending in a similar direction, suggests that there may be a shift towards a slower market. It's essential to keep a watchful eye on these developments to better understand the market's trajectory and make informed decisions accordingly. It's evident that there are key takeaways pointing towards a potential market slowdown or temporary pause in the positive developments observed in the past 5 months. The concerns are well-founded, considering the various metrics indicating a shift towards market normalization, such as an increase in inventory, declining turnover rates, reduced premiums over asking prices, and a drop in property values. As we look ahead to the next week, it will be crucial to continue monitoring the market closely to gain further insights into any emerging trends. Taking into account the 4th of July holiday weekend, this slowdown could be tied more to the upcoming holiday than to a trend towards the softer market. But we'll see. Thank you so much for joining us on this weekly update. We hope the summary and commentary provided valuable insights into how our market impacts your options. If you have any specific questions about navigating the market to sell or buy your home, don't hesitate to drop a comment below or reach out to us directly. We're here to guide you every step of the way. And if you found this information helpful, share it with your friends. And don't forget to hit the subscribe button so you'll always stay up to date on the latest real estate news here in San Ramon. Have a safe 4th of July weekend, and we'll see you next week with a new update.